The Financial Survival Network, helping you survive and thrive in the new economy. Go to kerrylutz.com and sign up for 30 free micro trainings on financial survival.
1490 WGCH. This is Kerry Lutz. You're listening to the Financial Survival Network. With me now to evaluate the day's events is David Morgan of silver-investor.com and themorganreport.com, a worldwide acknowledged precious metals expert. David, is your seatbelt buckled?
Yeah, it's been buckled all day, Kerry.
Hey, if you were a day trader, boy, you'd be going, you'd be having an adrenaline overdose, wouldn't you?
Well, I'll tell you, if you got short on the open, you'd probably feel pretty darn good. It's certainly been a wild day for the metals markets and other markets as well, but particularly the metals, as we both know. I've gotten several phone calls today, and actually, interestingly, very few people are really all that upset. Of course, there are always a few that are, but this is primarily volatility. We're going to see more of it, get used to it. And, it's par for the course, meaning when desperate bankers get boxed into the corner, they're going to do desperate things. And that's what we're seeing right now.
And when they do desperate things, it leads to buying opportunities for the rest of us. Did you think you'd get an opportunity to buy sub $30 silver again?
I did. I just did an update for our members only on the, basic plus trading, where I show people my thinking and trading. And usually I go through some charts, and I just put up a silver chart just a couple of nights ago. And I said, look, anything under $30 in the silver market is a good buy in the physical realm, longer term. And longer term for me is, 6 months, a year or two. Doesn't mean we can't see, low 20s. I doubt it, but we may. But under 30. And what I did on that chart was show everyone how few times it's been under 30. And not only how few times it's been under 30, I'm talking recent times now. I'm not talking when I started the website more than a decade ago. I'm talking this year. So for this year, how many few times it's been under 30 and how few times it actually closed under 30. There were several times where it traded below 30 but did not close below 30.
Yeah. And hey, if you're an industrial user and you use a fair amount of it, when you see sub 30 prices, you're going to go start buying because they're not stocking a lot of silver, these guys, because, you have this just-in-time inventory stuff where they only buy things when they need it. And, hey, if it's a couple $1,000,000, if it's $5 million, and you need it to produce your products, your purchasing guy is going to say, hey, we should go buy some more of this stuff because it's cheap now, right? It's going to...
Yeah, that's an excellent point. In fact, to the best of my memory, you are the first interviewer that's actually touched on that. And I've thought of it, many times. But let's just dig down on that a little deeper. So let's say that, first of all, you're right. Everyone works on this just-in-time inventory. But let's say that you're a big, silver user like a DuPont or Dow Chemical or Mitsubishi or a big electronics firm
Intel.
Like Sony.
Yeah.
Okay, so now what you've done is your trader or whatever, your bank is the more likely scenario, tells you that, don't worry, silver will be cheaper. So you got some paper silver, okay? You got some paper silver, and let's say you bought what you need for the next 2 months. You're going really long range out there. You're going to have 2 months worth, okay? And you bought it, let's just pick a number for illustration purposes, of 25, okay? So you're sitting there at 25 and silver's moving up. It's at 30 now, and then it'll go up to 40 and it's moving around. Now if you got its, big bashing today, it's under 30. And now you need that silver in your warehouse because you're going to start pumping out more circuit boards. Well, regardless of what your paper price is, which for you is good at 25, if the spot price is, let's say, 30, somebody's going to have to come up with that, silver, not the piece of paper. And what that means is you can have a situation, as you just described, I'm just digging down deeper and getting people to think a little more, deeply on this issue, that silver's got to come from somewhere. And so the real question, and you asked it, is at what level do these people buy silver for use in industry? And the answer is it varies. But I'm not trying to evade the question, because the point's real simple. The price what they have to receive it is basically the price you're looking at today and the next day and the next day and the next day, because it's a just-in-time inventory situation. And that's why when you see these spike lows in silver, like the 26 we hit very momentarily on this washout that we had a while back,
right,
didn't stay there very long, because anybody in the know, being the bullion bank type, is going to know that you can't get very much silver at that price. Can you get some at that price? Yes. Doesn't mean it's not going lower. What it means is there's a steady eating away of physical silver that you can't get around no matter what you do. Yeah, you can lock in a different price, so you can have a relationship with a mining company or a smelter or a bullion bank or any mix of over-the-counter derivatives. But at the end of the day, someone's going to have to get that silver, and it isn't going to be a piece of paper.
Yeah, because the piece of paper ain't going to make your car run or your iPhone or your computer. You need the real thing. And, you know, like you've always referred to this. Now, the physical market, it's kind of got a life of its own here, because, you know, if you're using like 10 pounds a month, you know, you'll just call up some broker, I guess. You know, I don't know how the actual mechanics of the market to work, but you got to find it from somebody. So now you're saying, well, you know, we're using a lot. Maybe we'll go directly to the mine. I know, like First Majestic will be happy to sell you all the silver you want direct, never having to go through a broker at a very modest amount over spot at any day of the week. So it's really going to further uproot the market if the price doesn't recover quickly, and it's going to be interesting for sure. Definitely going to be interesting. So as far as the silver stocks go and their intent to implement a dividend policy, an aggressive dividend policy, and I believe that a good portion of their reason for doing that is to blow off the abusive short sellers, the naked shorts, because if a stock's yielding 3-4%, it's not really shortable anymore, because the company shorting it has to pay the dividend, right? Do you think that's part of their mind work going on behind the scenes of how do we get rid of these shorts? How do we shake them out?
Well, I don't know if you have a degree in finance or not, but yeah, that's something that a lot of layman type investors don't know. But you're correct. In fact, what really would be good is, you know, some of these. Any company that pays a dividend, you're right. If you're shorting it and the dividend is due, then the shorter has to come up with that dividend payment. I mean, it'd be really nice to see a yield up into let's pick a number, something reasonable, like say 4, 5, 6, 7%. I mean, you start paying like these days a 5% dividend when you're getting, you know, these pathetically low yields on the U.S. Treasuries of any variety. That would definitely have something. It does that enter their thinking. I'm not sure it enters everyone's thinking, but certainly the larger companies that are better financed, that have $1 billion market caps or whatever, sure it enters their thinking. They've got some pretty smart COOs or CFOs that know how finance works, and they know it puts the hurt on these guys somewhat. It doesn't mean if you got a dividend, it's not going to prevent shorting of the stock, but it's a better safeguard than if you don't.
It's sure going to cut down on the naked shorting, and could create a short squeeze if there's a lot of a huge short position in a stock. And I think, as silver regains its monetary properties, it's recognized as money again, you're going to see these guys really looking at the dividends, because they want a different type of investor once their production is matured. They don't want, these people who are like in and out of the stock. I mean, I've got, natural gas master limited partnerships that are yielding 7-8%. There's virtually no short position in them, because, if that thing goes up, they're going to get a double hit, because if they increase the distribution and the price goes up as a result, they have to make up the increased distribution and they could potentially have a margin call because the stock's going to go up when the dividend goes up, all other things being equal, of course. But it's an interesting trend that I think you're going to see more and more of, because I think these miners are just going to say, enough. We're tired of having our price manipulated by the paper stockracy, and we're tired of having our stock prices manipulated by these guys. And let's put in an aggressive dividend policy and let the chips fall where they may. Plus, our stock will become more valuable, and it'll be perceived differently in the marketplace as well. It's kind of exciting, because I've been waiting for the return of the primacy of the dividend discount model in valuing stocks, because when we've had growth stocks, dividends are irrelevant. It's like you're buying it for the growth. But now that with the exception of Apple, there's really no growth stocks around. You know what I mean? Other than miners, there's no growth stocks.
Well, yeah, there are few, and I agree. One thing I want to point out was that I know you read our work, and we put out in the recent Morgan report, are these gold stocks, and we meant silver stocks as well, the next utility companies. And what we meant by that's what we've been addressing here about the dividend situation, because as these companies continue, I wrote part of it, and some of my staff wrote the rest of the article. But what I said in the beginning of this was that in the last bull market, what you saw in the South Africans was dividend yields up above 10%. Many of them.
I remember that. Yeah, you're right. I remember that.
And some of those were, an example would be a stock that sold for $10, and 10 years later, the stock was selling at $100 and the yield was 10%. So the actual dividend you got a decade later was the price you paid for the stock a decade earlier. Now, if that doesn't put a smile on your face, Kerry, I don't know what does.
Yeah.
I mean, that's like buying a Lexus, and a decade later, you get dividend payments, a Lexus coming in your driveway every year, I mean, that's kind of a nice feeling, I'm telling you. I like it.
Yeah, I love it too. What about the concept of a mining MLP? Is that impractical? Has nobody wanted to take it on? Because, from an investor standpoint, I love MLPs because, they're not trying to figure out how to reinvest my money by rehypothecation or whatever other means they can. They're just paying back the majority of the profits. I think it's a great model for shareholders. Maybe, and then if they want to, increase production or acquire additional properties, go sell some more stock because you got a great record and people trust you. I mean, I just haven't seen it in the mining field.
I don't know. Yeah, I don't know if you will. You just asked my opinion. I sort of doubt it. Although, from reading my work, that we are very big on some of the royalty companies, and of course,
right.
Everyone's got their opinion, and that's fine. I like to joke about that sometimes. People tell me, "Well, there's this, there's that." I say, "Well, do you want to be right or do you want to be rich?" I mean, look, we do the analysis, and we had a company, as you know, I won't give the symbol because we don't like long lists. I like to do my homework. I like to focus. I like to get the best of the best. If you're going to get the best of the best, you're not going to buy every stock out there. You're going to eliminate almost all of them.
Right.
And then you're going to cherry pick. And it doesn't mean you always get it right, but if that is your strategy and it works, why do something different? Anyway, the point being that we had a company that was a fairly high-priced stock. It's a royalty company. We showed everybody how undervalued it was. And I had a Wall Street guy. I mean, this is a friend of mine, but this guy knows what he's doing. So that's got to be one of the best reports because, we get institutional reports that aren't this good, that are in-depth. Of course, and we strive for that. I mean, I'm not saying we should only have our subscriber base be institutions. It's much too cheap a newsletter for that. But nonetheless, it doesn't prevent us from doing top quality work. Well, that stock went from the level that it was to a level of probably a 25% gain, while a lot of these other companies were just going in the toilet. Now, I'm not saying I always get it right. But what I am saying is that we do our due diligence, we do our homework, we know what we're doing. And just because a stock is high priced doesn't mean you shouldn't buy it. I just got off an interview with another company, I should say another internet journalist is the best way to say it. Mm-hmm. And this guy was a very good interviewer. He knew the mining industry fairly well. And we were talking about a particular stock, and he said, well, it's gone from X to, 3X, and it's time to get out. I said, not necessarily. I go, look at a growth company and take one that we all know, like Coca-Cola, okay? I mean, how many highs does a good company make over the course of 10 or 20 years or 30 or 40 or 50 years? Another new high and 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 another new high. Excuse me, but that's the way it works. So it happens in the mining industry as well as other industries. So this buy low, sell high idea isn't necessarily wrong. The point I'm making is if you want to get rich in this sector, you want to get rid of the dogs and you want to hang on to the winners. You want to hold those winners as long as you can. And that's why the strategy that I set out more than a decade ago to buy the best of the best, what I call top tier cash rich unhedged mining companies. If you do what I've taught, now not stocks aren't off from their tops because some of them are, although one I just mentioned is pretty close to its all-time high, are ones that I felt if you stayed with this bull market all the way to the end, and I think we're far from that, you would do exceedingly well because you're disciplined enough to invest. And as you said at the beginning of your show, Kerry, where are the investors? Where are they gone? Everything's day trader. Oh, silver's down. If I was in on the open and I shorted, I would set it myself. And I like to do both. I mean, let's face it. I a little too much, energy to just invest only. But a lot of my portfolio is locked away in the strategy I just outlined. And then I take a little bit of capital and I do, swing for the fences or take higher risk. But I do it with money that I can afford to lose it. And I also do it in a very strategic manner, in a disciplined approach, in a way that most people cannot do because they get an idea of how they're going to trade. And they got this great plan. And then 2 days later, they change their plan. You do that, you're going to lose all your money trading, I guarantee you.
Yeah, there's no question about that. And it's kind of refreshing that there is a sector that if you find the right stocks, you can buy and hold them. And you don't have to be a frenetic trader unless you want to be. To some people, the trading is kind of gambling with an edge because you definitely can get an edge if you're an effective trader and you have the discipline and you can control the emotions. But that is the opposite of what I am. So I have to look at stocks that really I believe in, that I know are solid investments, that have good management and good properties. And, following the Morgan Report is really one of the best ways. I remember when I was at the Silver Summit and you were interviewing CEOs and geologists of different mining companies. And, I got a view of the whole sector that honestly I had never even dreamed of when I started this whole enterprise. And it was fascinating because, I listened to the geologist and the guy was on the level. You knew him. You said he was a good guy, and he told a story that really was pretty compelling and made a lot of sense. And, it sounded like a company that was worth holding on to for the long term. And that's what's fascinating. That's what I love about your report. That's why I've bought a number of the companies in there, and I bought them at low lows. The other thing I've done, now maybe it makes sense, maybe not, but I do believe that when your company doubles, take your money off the table, because that just works for me, because I kind of hit for the bleachers, and if you hit for the bleachers every time, you're going to strike out more often than not. But that's my own personal reality check trading program that I do. So
well, I think it's a great one. I've done that all the way up to the speculative side of our model portfolio. And it's just great discipline to go ahead and get your original capital. I mean, think about it in several ways. There's you can think of it in many ways, but there's a couple that come to mind. One is if you've taken the original capital off the table and the stock continues to go up, you've got that money back and you can put it in another speculation. Okay. Secondly, the other way to think about it is, well, geez, if I left all my money in and that company keeps making a new high, you just talked about a moment ago, David, wouldn't I have been better off leaving it in there? The answer to that is yes, you would have. Yeah. But when you take that money off the table, and let half of it ride, I mean, you're still in a great position, especially if it continues to go up. And I'll take a quote from Jim Dines. I don't know if this is Jim's original quote or he took it from somebody, but he says, love what you get because it's all you're going to get. I mean, I love to make money in the mining sector. And I'd love to tell you that every pick I've ever made has done wonderful, but that's not true. But you need to have, again, a disciplined approach. But if you've done what I've taught from the get-go, and I still have subscribers that started with me, over a decade ago, that, have a long-term view. And certainly a lot of these stocks, again, are not where they once were, but they understand that these markets ebb and flow. And if they believe, well, like I believe, that we're far, far, far from the ultimate top, this is the time to be brave when others are fearful. Today's a great test. Yeah. If you're really afraid that silver's going back down to $5 because of what it did today, there's probably a sector you should get out of. Because if you really believe that, you shouldn't be in this market. Now, if you believe, like I believe, that this is an opportunity and it could go lower, and you're disciplined to put more money in the market, like I did today, but not all of it, then you probably have an approach, as long as I maintain, being correct, meaning that we are still in a bull market. I believe strongly we are. You will do well over time. So it's not easy, but it's going to be worth it. And what's really going to be worth it is when everybody turns and says, oh my goodness, my RA is worth nothing. The Dow's going nowhere. My pension isn't there. Whatever's going on in the financial markets in the future, which I think are bound to get more convoluted, you're going to run to gold. You're going to run to silver. And what's going to happen then is these prices that you'll remember back, 2 months ago, 6 months ago, 2 years ago, whatever the case may be, are going to look so unbelievably cheap. You'll be kicking yourself. Why didn't somebody tell me to buy? Well, let me tell you, buy. Buy silver under 30, buy gold under 1,600, and have a longer term view, meaning over a couple of years, and you'll do just fine. Does that mean you're getting the bottom? No, but you're getting them low.
Yep, absolutely. Totally with you. Hey, David, it's always a pleasure having you on the show. I can't urge people enough to invest a very modest fee in the Morgan Report, because it's one of those publications that, honestly, the stocks I've gotten there recently, some of them have literally paid for a lifetime subscription, and I plan on being around for a long time.
Well, great to hear it, Kerry. Thank you. It's good to see you out here in our humble town out here in the great Northwest.
A great steakhouse there, one of the best in the country, and I consider myself a steakhouse aficionado, because I've eaten probably at the best steakhouse in the world as far as I'm concerned in Milwaukee, and this place was really, really incredible. Churchill's, if anybody's out in Spokane, it's really worth the trip.
I'll digress for a moment. I have a couple of friends, my brokers, both my brokers are in Chicago, and they came out not that long ago. We went to Churchill's, and they made a similar comment. And there's Chicago's pretty well known for some of their steakhouses as well. So, yeah, it is a good place. So I'm glad you enjoyed it.
And the wait staff is among the most gorgeous of any restaurant on the planet. So, it's yet another reason to go to Churchill's in Spokane. All right, David, we'll talk to you soon.
Okay, Kerry. Take care. Bye-bye.